and welcome to the Business Standard Morning Show. I'm Kanishka Gupta. It's the 5th of June 2023, and here are the top stories for the day. India has reopened the window for applying to its ambitious chip making plan after the three aspirants failed to qualify for the financial incentives. And it has also tweaked the old scheme, extending incentives for wafers of all sizes. So, what forced the government to tweak its semiconductor policy? And how can India's chip making dream be realized? Tushar Verma has the answer.
By the fag end of 2021, the world had seen the worst of the pandemic. Apart from the lives, it had also taken a huge toll on the world economy. The supply chain was in tatters, and among the precious commodities which were in short supply was advanced semiconductor chips. The world was mostly dependent on Taiwan, which still produces 90% of advanced semiconductors. It was then that India smelled an opportunity and rolled out an ambitious plan to manufacture these advanced wafers in the country. The policy, with India Semiconductor Mission, or ISM as its nodal agency, laid out a massive 76,000 crore rupees incentive program to set up chip fabrication facilities. The window was opened in January 2022 for 45 days and got 3 applications. It included the $19.5 billion Vedanta Foxconn joint venture, $3 billion investment plan by International Semiconductor Consortium Mission, that is a joint venture between Next Orbit Ventures and Israel's Tar Semiconductors, and 1 application from IGSS Ventures, which is a Singapore-based semiconductor company. But over a year on, the Vedanta Foxconn deal is stuck due to disagreements with ST Microelectronics over technology transfer, partnership duration, and other issues. Without a technology partner, the JV cannot set up a plant or qualify for incentives. The plans of ISMC and TAR Consortium and IGSS are also stuck. Intel's acquisition of TAR has delayed ISMC's plans, and IGSS wants to reapply under the new incentive program. The initial 2022 policy favored 28nm chip facilities. Under it, the government was to bear a part of the cost in setting up the fabrication facilities. For 28nm chips, the government was to bear 50% of the total project cost. Whereas for 48nm chips, the incentive was for 40% of the project cost, and for 65nm chips, it was 30%. But now, the government has come out with a new policy. It extends the 50% project cost incentive to all the 3 chip sizes. So, what does this change in policy say about India's semiconductor ambition?
When you are particularly setting up a semiconductor fab, it requires a lot of auxiliary industries, and that support currently is not there in the country. So I think for any industry to invest in a bleeding node kind of a technology, I would have my own apprehensions. So everybody will start somewhere, and the ecosystem will develop, and then the advanced nodes will happen. Even if any node, any such manufacturing happening will be a big gain for India, because that will create that ecosystem, and after that the subsequent nodes will anyway happen.
India is facing competition from other countries. It is not the only one trying to attract companies to set up chip manufacturing facilities, and nor is it the only one giving out incentives. Months after India rolled out its chip plan, the European Union too came out with its own program to attract chip makers with a massive $46 billion incentive. The US also rolled out its own Chips and Science Act with a $52 billion incentive. And the West is not the only competitor. South Korea passed a law this year that gives tax credit to both major companies and SMEs in chip manufacturing business. Taiwan too is strong in the game. It announced it will give 25% of annual expenses on research and development as tax credit to companies. Against this backdrop, how can India compete with such countries?
See, I would say 2 things is required for semiconductor manufacturing for the country like India. One is the cash incentives to bridge finance the high cost of the semiconductor manufacturing. and the ecosystem and the supply chain. Now, what Government of India has agreed to give is 50% of incentives. It is in line with what developed countries like US through the CHIPS Act or the European Commission through their CHIPS Act is providing ecosystem and the supply chain will create once an semiconductor fab comes in. That is only possible when one of the chip plant will get approved.
Under the new policy, while the ceiling of 12,000 crore rupees in incentive for display fab appeared to have been removed, the incentive for compound semiconductor manufacturing is now 50% of project cost, up from 30%. What do experts have to say about the new policy?
Since I have been involved in making of a first semiconductor incentive policy way back in 2006-7, and thereafter that policy was modified in 2014 also. I would say 2014 policy was the best policy with some of the changes could have been incorporated into that. That 2014 policy was more comprehensive than 2022 policy in the sense that 2022 policy talks about only 50% of the fiscal support. Whether this fiscal support is in addition to the cash incentive, the tax exemptions, direct tax exemptions, or indirect tax exemptions, that is not very clear. And 2014 policy also provided for reimbursement of employee training costs. If whatever changes to the government think of doing it in 2022 policy should be in line with 2014 policy.
The global semiconductor market is expected to touch a whopping $1 trillion by the end of this decade. In India, the present semiconductor market size is about $23 billion. This shows that there is immense potential to become a global chip manufacturing hub.
She's working her way to the corner office. Business Standard.
While India's chip making plan is still waiting in the wings, its bid to become a phone exporting country has finally taken off. Driven by Apple's bumper shipments, India's overall smartphone exports crossed the 40,000 crore rupee mark for the first time in FY23. Meanwhile, the iPhone maker's first two stores in India have crossed sales of about 50 crore rupees in less than 45 days of their opening. In India, this is a record as far as sales of any electronic stores are concerned. So, has Tim Cook's India bet paid off? And what are the challenges ahead as Apple's competitor Samsung also plans to open its own stores here? Tariq Ahmed brings you the answer.
Apple opened its first retail store in India in Mumbai on April 18, followed by another in Delhi 2 days later. While the first day's sales in Mumbai store was reportedly over 10 crore rupees, the Delhi store also received a similar reception with more than 6,000 footfalls on day 1. Now, less than 45 days on, each store has a monthly sale of around 25 crore rupees, according to a newspaper report. That's a big number considering it's more than twice the revenue of other electronic stores in the country during non-Diwali period. Despite the fact that the average selling price of Apple devices is higher than its peers, so far these numbers have exceeded all expectations. Let's understand the factors that played in favor of Apple's own stores in India.
It's been long coming for Apple. And it's no secret that Apple's store experience is famed, retail experience, right? So both in terms of availability of the products, availability of the SKUs, the variants, the ambience, the experience of purchase, the knowledge of the staff, the support, so on and so forth, right?
Experts believe the rise in purchasing power of Indian middle class played a crucial role in Apple Store's success. However, its most popular offering, the iPhone, is still an aspirational product in India's price-sensitive market, where more than 95% of devices run on Google's Android platform. So, what's the catch here?
If you were to look at smartphones retailing at 1 lakh and above, this is a segment we call as Uber Premium, we saw a stupendous 208% year-on-year growth in this particular segment. So There is a strong premiumization which is happening, increased ASPs at play, and which is providing an opportunity for smartphone brands such as Apple and Samsung to provide feature rich and technologically advanced devices to consumers.
But how does the success of Apple's own brick and mortar store impact its resellers? While some resellers believe the new stores will add to the momentum of demand for Apple products, the most affected would be the ones in the vicinity. After 9 years of service, one of Apple's premium reseller, Imagine, shut shop at the same place of its Delhi store at Select City Walk Mall.
It's actually an opportunity for Apple resellers to enhance the experience of the consumer in their own stores, because they, in the shorter term, there'll be cannibalization and they'll go to that store. But I think it's for the catchment area. I think not everybody can go to one. I mean, Apple will not have 10 stores in Delhi and Bombay, right? So they would have to go to other cities as well, and 2 or 3 stores in these cities in the next 2-3 years. So Apple, I mean, in such big cities, Apple resellers will still maintain their client in that catchment area. It only gives an opportunity to enhance it, and I think it's a good opportunity for them to actually lure some of the consumers from online or large format retail to Apple resellers that I can also give their experience. I would see it as an opportunity in the longer term. Shorter term, yes, there might be some sales hit.
At present, China generates about $75 billion a year for Apple, making it the tech giant's biggest sales region after the Americas and Europe. On the other hand, Apple India's consolidated revenue touched an all-time high of slightly more than $4 billion in the financial year 2022. Apple follows an October to September fiscal year. Its overall sales in India from October 2022 till March 2023 have touched almost $6 billion. Notwithstanding the impressive numbers, Apple's own retail stores are likely to face competition from brands like Samsung and OnePlus. Earlier this year, Samsung announced the opening of 15 experience stores across 9 cities of India. The existing OnePlus store can also give the tech giant a fair bit of competition on the retail front.
The next competition, at least in the devices space, I'll not say laptop space, but at least in the phones and the watches and earphone and everything else, in that premium space is Samsung only. OnePlus has had this store. OnePlus store experience is great and people know that. But Samsung in the next one, Samsung has its own store in Bangalore. That's their own store. They control the experience. It's a fantastic store. I think what it'll do is it'll push brands like Samsung to actually open more such stores like Bangalore or Poira House. It will certainly push the competition to do that. At least in the bigger cities, we will see that where brands, as I said earlier as well, where brands would love to control the experience and really showcase the entire range of products which are there, even if sales is not the primary thing, which will obviously will be, but one of the things is experience of the purchase and availability of everything when it's launched, and that Apple cannot afford not to have that, and Samsung will be pushed to do that as well.
Company insiders hint at Apple's plan to open more stores in other cities of the country, riding on its success. Despite the initial enthusiasm, replicating the China story in India may be a tough task. As Apple is increasingly looking to drive growth in India, the success of Tim Cook's bet on the country will also depend on price strategy and challenges from the competitors.
Over 6,000 to 7,000 fans had thronged the opening of Apple's retail store in Delhi and Mumbai. Tim Cook was overwhelmed with the reception he got in the country. Moving on, let us turn our gaze to Mint Street. The RBI's Monetary Policy Committee will meet between June 6th and 8th this week. While investors expect the central bank to hold the repo rate for a second straight meeting at 6.5%, it would be RBI Governor Shaktikanta Das's commentary that would trigger the next directional move in the markets. Will the governor's address help markets move out of the consolidation phase? And how do rate-sensitive sectors look on the charts ahead of the policy? Let's find out in our next report.
The outcome of the meeting of the Reserve Bank of India's rate-setting panel could prove to be the key pivot point for the markets this week. Over the past 3 weeks, the benchmark S&P BSE Sensex has eked out gains of just 519 points, while the Nifty 50 added 219 points. The indices, in fact, gained merely 0.1% last week. G. Chokalingam of Economics Research expects the benchmark indices to rise about 3 to 4% in the near term, in case the RBI's Monetary Policy Committee holds the repo rate at 6.5% on Thursday, June 8th.
I think market is not worried about RBI policy, more on the global factors, whether the rate hike will happen, because US Fed people are divided. Some people are saying they should pause, some people are saying not at over, they should hike. But still, I firmly believe that RBI will pause this time, and that will definitely help the markets.
However, what would also hold importance would be the RBI governor's commentary.
There could be a possibility that they might revise down the inflation forecast for the near term a bit lower and may keep the growth projections as is at this point in time. So as I said that, given the fact that they still have a hawkish rhetoric in general, and they also have a cautious stance on inflation, and more importantly, what is happening on the world is that despite massive rate hikes, the growth and inflation levers are still pretty much, as we expect, a decline in inflation on a gradual basis and some moderation in growth on the back of external headwinds. I think while we stay on hold through last part of this year, maybe early part of next year or mid of next year, you should see window of rate cut opening.
Technically, the Nifty 50 index has resistance at 18,650 levels, while the BSE Sensex faces hurdles at 62,900. Against this backdrop, rate-sensitive sectors like banks and automobiles would be in focus this week.
The short-term trend for the Nifty Bank Index is aiming to scale 45,000 levels with a support of 42,500. For Nifty Auto Index, which is showing a formation of higher high, higher low, it is heading towards 15,000 levels, keeping a support at 13,800. For Nifty Realty Index, the higher high position and the breakout indicates a level of 525 with a support of 470 levels.
Thus, a prolonged policy pause amid global headwinds could give fillip to cyclical sectors. Of these, banks and real estate stocks are likely to benefit the most. For the rest of the week, services PMI data for May, IKEA Lightning IPO, and global economic data points will be on investors' radar.
She'll soon be quoted on the front page. Business Standard.
Well, in these times of high-frequency trading, a millisecond can make a lot of difference. Information travels at the speed of light now, thanks to the internet. And do you know that for most big corporates, data centers play a crucial role? They are also called internet exchange points, or colloquially carrier hotels, where the internet lives. Raghav Agarwal tells us more about them.
Imagine a building that is key to maintaining data connectivity and telecommunications for top telcos like Verizon and AT&T, and cloud services for Amazon and Google. In today's world, it would be at the heart of the operations of big corporates as well as their service to customers. One such building, One Wilshire, located in downtown Los Angeles, recently became the most valued commercial property in the United States of America, commanding a rate of $855 per square foot or $9,000 per square meter. These buildings are called carrier hotels or co-location facilities. But what are these hotels and why are they so important? A carrier hotel is an interconnected urban data center and hub for networks and cloud services in the world's major cities. Tech companies install their equipment in these buildings and connect to internet exchanges and cloud platforms, which then operate their telecommunications and data centers across the globe. These buildings serve as anchor points for high-speed fiber optic cables. One can find rows of servers, switches, and routing equipment within their walls. The servers here store, process, and transfer the data we send and receive over the internet. Carrier hotels serve as the backbone of today's digital world. They allow companies to exchange data faster and with lower latency. They are allotted separate suites and interconnection occurs through a Meet Me room. A Meet Me room is a secure data center room allowing companies to connect to one or multiple carriers. It enables internet service providers, cable companies, cloud service providers, and other tenants to cross-connect. A typical MMR has cabinets and racks with the tenant's hardware for fast data transfer. These rooms allow ISPs and organizations hosted in the same data center to connect, enabling them to exchange data physically. The data transfer here is cheaper and more secure. Located mostly in key cities, the carrier hotels allow the companies to collect, process, and then route the data in one place. These companies can also provide their data services to other businesses. Moreover, it allows the companies to avoid failures in an emergency as the carrier hotels have multiple power sources and internet connections. One Wilshire, for instance, has 5 separate utility power risers and 11 on-site power generators. In case of a power failure, the building has enough fuel for these power generators to last 24 hours. These buildings also allow customers to choose the best suited provider for their needs. Although the companies can easily use carrier hotels located on other continents as they are densely connected, ST Telemedia or STT has established several data centers in Mumbai. One of their facilities is located in Prabhadevi, one in Andheri, and another in Bandra Kurla complex.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
These data centers even have man traps, which make the breach almost impossible. That is all for today. For more news, views, and analysis, please log on to business-standard.com. If you like this video, share it and subscribe to Business Standard. For more news, views, and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram, and LinkedIn.